Joins in on the show right now. Mahantesh, hi, afternoon. Soon we'll be counting down to earnings as well. What's the expectation, especially looking at what we've heard from Q1 updates from banks?
So, the quarter one results should be the first quarter post-COVID where we don't have any base effect to really look at and measure the growth rates and the trends thereof from various companies. So the expectation is that most of the companies will start um, either showing moderated kind of growth, but there will be quality in terms of earnings. So when I say moderated growth, I must clarify that would be on the top line, but the quality of earnings and the margin improvements, etc., are going to be decent. As far as banks is concerned, obviously this trend will be slightly different because you will notice that the banks will start reporting actually compression and NIMS. Ever since the interest rates on the deposit sides have actually gone up. They hadn't gone up, if you recall, by much relative to the lending rates. Now the reverse is going to start happening. But here again, I want to focus on the quality. While the NIMS may compress, the quality of earnings will still be better.
Okay, the quality of earnings are likely to be better, at least for some of the banking names. But Mahantesh, what's your take regarding the real estate pack? We've got the Q1 operational updates from a couple of them, the likes of Lodha, smaller ones like Puravankara and Ajmera as well. And it looks like demand is holding up. Contrary to the belief of the interest rate hike, the entire inflation worry, the demand is not going anywhere.
Actually, that isn't surprising really from the real estate pack, because what had really happened is that the supply constraints on real estate companies, thanks to the COVID period, has gone away. So there are a lot more better supplies coming in. And when I say better supplies, the choices for customers, real estate buyers are better. Interest rates undoubtedly affect the demand trends. That is what is the plain reading. But you should remember that now we have come into a stage where there is, you may call it revenge buying, but the suppressed buying, the suppressed demand, the latent demand is actually coming to the fore, and that is helping the sales trends ahead. And you will also notice that the price trends on the real estate have not moved up too sharply to the discomfort of most buyers. So the better choices in terms of real estate projects, the latent demand that is coming to the surface, as well as the price trends being subdued, is all helping the demand stay up.
That it's staying up, and it's clearly evident from the Q1 updates as well that you've seen from players like macro tech developers, even though sequentially they've actually seen a bit of a dip. Or for that matter, Puravankara, which came out with its numbers today, the sales value is up 119% on a year-on-year basis and 12% uptick sequentially. Realizations have gone up about 11%, flat sequentially, however, and volumes as well have seen an uptick of 12% on a sequential basis. And smaller ones like in Ajmera as well have seen a bit of a downtick. Sales value is down, but it's a 60% surge nonetheless on a sequential basis that they have seen. And along with that, Mahantesh, what you're also seeing is some of these construction players which are actually holding out. And we often talked about everything from a capacity to an NCC, etc. That entire cluster with the real estate infra boom is actually holding up quite a fair bit.
Yeah, the real estate infra boom, particularly from the government side, is on an upbeat mode. The spending is picking up quite sharply, and therefore we will find most of these infrastructure players starting to do better. In fact, they never had a problem related to order booking per se, but then most of the projects were getting stuck or getting delayed. The momentum has now gathered pace with the fact that many of these infrastructure companies will be able to report better earnings going ahead. Again, I am repeating it again, but quality of the earnings will be far better for infrastructure companies from the margin perspective. Overall, the interest rate scenario has also cooled off. So much of their debt worries related to the interest rates are now of the past. They will be in a better position to raise a good amount of debt for their ongoing projects for completion.